Hello everyone, my name is BrianBgamble. Today I am talking to you about the Qualified Opportunity Zone program and what makes it so great. Now first off, I want to explain that I'm not a lawyer, I'm not an accountant, but I am a part of a group called Gray Holdings Group, and what we do is we manage a Qualified Opportunity Zone fund called Tech Transfer Fund, and also we are managing a Qualified Opportunity Zone business that's called Gray Ops LLC, and that's in the defense sector. And so I have learned a lot about the Opportunity Zone business just due to what we're doing in my profession, and I get a lot of questions about this, and I'm so surprised that more people aren't aware of this program because it's such a great program, but it is so new, and we're one of the first funds in the US to do this. So let's talk about the Qualified Opportunity Zone program. It was a part of the Tax Cut and Jobs Act that went through in December 2017. Okay? So it's very, very new. And there is still a lot of questions associated with this program because there are very few regulations. But that is how it's designed. You know, they wanted it to have few regulations. Okay? So we'll call this a Tax Cut Act. Okay? Now, the mission of this program was it's an economic development tool to spur economic development and job creation. And each state in the spring of 2018 had to designate the zones that were in each state. Now, I'm from Maryland, and I want to show you an example of some of the zones in Maryland. So this is a map of Baltimore City. And the blue highlights are where the zones are located. Now, if you're not familiar with Baltimore, this is East Baltimore and West Baltimore. This is sort of where the Wire was filmed. And I want to point out that the Opportunity Zone program benefits both distressed communities but also economically important communities. So as you can see, these are very distressed communities where there's a lot of vacant houses, a lot of blight, a lot of crime. And this program will be very beneficial to those communities, and it's very exciting to see what's going to happen. But I also want to point out that these zones are also in economically important areas. Like, for example, all of downtown Baltimore is in a zone. So where T. Rowe Price is, all these skyscrapers, they're all in these opportunity zones, which is very interesting. In addition, at least in Maryland, one of the biggest beneficiaries of these opportunity zones is outside of military bases. So outside, basically all of Fort Meade is in an opportunity zone. Outside of Fort Washington, which is near Washington, D.C., Indian Head, outside of Indian Head Energetics Lab, and in Lusby and Lexington Park, outside of the Patuxent Naval Station. In addition, you also have Chestertown. You've got lots of Western Maryland, Salisbury. So there's zones all over the place, and I highly suggest you go to the CDFI website to check out their interactive map, which it's a really great map where you can easily identify where the zones are located. But you have to be careful when it comes to investing, because these zones are usually divided by roads, railroad tracks, streams is a big one, and one side of the street is a zone and the other side of the street isn't in a zone. So that's very important when it comes to investing. All right. So let's talk about the tax benefits. So the Qualified Opportunity Zone program is really designed to leverage all of the unrealized capital gains that are in the U.S. So I think there's about $4 to $6 trillion in untapped capital gains in the US. So this is basically people sitting on real estate, private businesses, and also liquid appreciating assets like stocks and bonds, and they're just sitting on them, and they don't want to sell because they're afraid of getting a hefty tax bill. This is your alternative. This is your ticket out, because there are 3 tax benefits if you decide to utilize this program. So if you have a big capital gains and you decide to sell that capital gain and put it in a qualified opportunity fund, which is a corporation or partnership, it has to be an equity interest in some type of company. It could be preferred stock as well. Then you get 3 tax benefits. The first tax benefit is you get to defer your capital gains taxes for 8 years. So that's pretty awesome. 8-year capital gain deferment. All right. That is pretty great. So it goes into a fund. You don't pay capital gains on it, except for maybe state capital gains, but that's another story. And then you defer it for 8 years. Okay. Second benefit is you get a 15. After 8 years, your taxes will come due, but in some cases, you'll get a 15% discount. Now, what I've heard is the new regulations have decided to make it so the 15% discount option is really only for LLCs that have experienced losses during that period, that 8-year period. So that wouldn't really be beneficial if your opportunity fund is a C Corp, for example. So that's what I've heard. Don't quote me on that, but that's what I've heard. So 15% discount. But also, you're going to be getting a discount no matter what due to inflation, because inflation goes up every year, so automatically you might be receiving a 15% discount on your capital gains tax just due to inflation, which is pretty sweet. Now, the third and the most important benefit, in my opinion, is if you hold on to that qualified opportunity fund for 10 years, your capital gain, or if you hold on to that interest and you decide to sell that interest, you will pay 0 capital gains on that interest. So that is huge. All right, so 3, 10% or 10-year tax-free gain. This is huge. So let's just say, for example, you invest in a fund, and it invests either in real estate or business. We'll get to that in a sec. Let's just say it invests in an asset of some kind that qualifies for the program, and you buy that asset for $1 million. And after 10 years, that asset is suddenly worth $10 million. So you have a $9 million capital gain. And if you decide to sell that fund, there's that $9 million in capital gains is completely tax-free. That is huge, okay? Now this brings me to my next point, all right? How do you invest? How do these opportunity funds invest? And really there's 2 options. What most people are doing is they are investing in real estate, okay? And this is pretty straightforward. What they do is they find, usually it's like an apartment building or multifamily unit or commercial building. Sometimes it's a bunch of single family units, and wherever it might be in the city or wherever it is within a zone, and they have to make substantial improvements to that property. It's substantial improvements means putting in improvements that are equal to or greater than the purchase price. So if you buy it for $1 million, you are required to put in another $1 million in improvements in that property within the next 30 months of you purchasing that property, okay? So that's pretty straightforward, and then you just lease it. I mean, you could technically sell it and roll the money back into the fund, but most people are just leasing it. And this is a great way to have, entire areas transformed on the real estate side. Okay? Now, what we're doing, and what I think is the best solution, is to focus on the qualified opportunity zone business. So this is a startup or a venture or a company that's fairly new, it's very new. It doesn't have really any assets in it yet, but it's going to be developing something soon, but has the intent of being an opportunity zone business. If you buy a piece of property within these zones and make substantial improvements, you just conduct your business as normal within that zone. So this is what we're doing. What we're doing at Gray Holdings Group is we are a technology transfer company where we license technology from the Department of Defense, and we develop it, and then we commercialize it and sell it back to the defense, first responders, and commercial markets. And this is extremely lucrative, but it's also a little bit more risky and a little bit more complex. But it is also the best beneficiary, or it will be more beneficial to invest in a sound opportunity zone business due to the 10-year tax-free gain, which I think is the most valuable aspect. So if you think about it, if you think about the 10-year tax-free gain, the real estate will be appreciating significantly in these zones in the next 10 years. But the opportunity zone business will get the benefit of real estate appreciation, but they will also get the benefit of business appreciation. And that is really, really powerful. And like I said, the Secretary of Treasury said, it's less about the zones and more about the opportunity. And I think job creation is what they're really after and what these politicians are really after. So, the real estate side does create jobs, but I think politicians would also like to see more businesses coming into these zones. So I think that is what we're focused on here at Gray Holdings Group. And it's really, really exciting, and we really love this program. But there's lots of ways you can do this. I mean, you can be very creative on the business side as long as it's not a sin business, which means it's not a casino, liquor store, golf course, a tanning salon. So otherwise, you can be fairly creative when it comes to this opportunity zone program, and it has very little regulations by design. Its mission is to create jobs and economic development. And if you're doing that, and you're certified, and you're doing everything with the regulations correctly, which isn't that hard, and keep it pretty simple, you can be proactive and start investing, and if you want, also creating your own businesses or funds and being proactive and going out there and trying to help these communities. And I think that's what's really important. With us, it's about helping the community and helping our warfighters, making sure our employees are happy, and providing an enormous return that's tax-free for our investors. So if you have any questions, feel free to reach out. You can reach out to me. My name's BrianBgamble. You can find me out on LinkedIn, or you can call me at 410-627-9298. Thanks.